Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 16th of December. I'm Daniel Lam, your host for the podcast. There has been weaknesses in individual heavyweight technology stocks towards the end of the third quarter US earnings season last week. This prompted investors to start talking about, again, the rotation into value sectors. Will there be further broadening out of performance amongst US equities? And more importantly, would there be deeper correction in the US technology stocks? Well, first of all, we have had a number of false starts to the value sectors over the last few years. None of them lasted for a prolonged period of time. In order for the value stocks to perform, many of such are domestically oriented. One would need to see a strong sustained resurgence in the US ISM manufacturing data, perhaps to levels in the mid-50s. But this, given the conditions of the US economy, is not very likely. Now, regarding deeper correction in US technology stocks, it is noteworthy that the US 10-year treasury yield has been grinding higher over the last couple of weeks. At which point should investors be concerned? Well, over the last 15 years, a 30 basis point rise in US 10-year treasury yield within a short period of time usually would trigger fall in equities. Now, looking at the chart, the US 10-year treasury yield bottomed just under 4% at the end of November. Hence, the key area to watch would be around 4.25 to 4.3. But the saving grace here is the relatively light positioning in US equities versus past episodes of sell-offs. Now, the positioning is pretty close to the neutral mark, whereas the semiconductor-related sell-offs over the last 2 years all occurred when US equity positioning is around plus 1.5 standard deviation or higher. Thus, investors should not fear the mild volatility ahead in US technology stocks and should be using the pullbacks as opportunities to be adding to them. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.